the $64,000 question here. As you take a look at what's going on in the marketplace, you had this report come out in June. Every signal out there should have just made the market explode. Obviously, there's some short coverings and those kind of things going on because of some fear that we see with recessionary talk and those kind of things with the economy. But man, I tell you what, soybeans and corn over the last 2 weeks have taken about $2 to $2.50 off the price there. And what are your thoughts, Rich? Where's the driving factor that's coming from?
Yeah, the driving factor of this is, I think you hit the nail on the head. Fears of a recession. We overdid this thing to the upside. We had a massive amount of speculative money come in. What has changed in our futures markets, I think, the last couple of years is all these ETFs. So you've got what traditional stock market participants, equity market participants, now have access to a multitude of ETFs that are traded outside of our normal futures exchanges, but allow access and exposure to either baskets of commodities or they break them out. You can buy one that's just corn, just wheat, just cocoa, just any commodity out there, or baskets of commodities, grains, metals, energies. And what happens is when investor money flows into these exchange traded funds, the exchange traded funds, for their exposure to the commodity or raw material, go into the futures market, purchase futures contracts. That is a very new wrinkle that we've had that for a while. There just wasn't large participation in it. And there's been a massive explosion in interest and trading in those exchange traded fund vehicles. In addition, you've got billions, if not hundreds of billions of dollars that trade within the futures market speculatively, trying to make a return for investors. And inflation has been, the real hot button here, obviously, with, $6 diesel.